Good morning, Paul Georgie from Allendale. It's July 19th, 2010. Well, the outside markets today hopefully will give us an impact here on the grain markets. Right now, the dollar is up 13 points. Crude oil is down slightly. Stock market's up about 35. And the gold is anywhere from $2 to $3 lower. The Consumer Confidence Index that came out last Friday caused stock players to liquidate a lot of positions. We've seen a lot of pressure in the stock market last week, or at the end of the week anyway, and hopefully we can see some recovery there. We do have the National Association of Home Builders releasing their July Housing Market Index here today. Trade's going to be watching for that and see how that might overall affect the confidence of the investor. There's two factors that are affecting grain markets today. One of them is the confidence of the investor, and the fund's going to be back in buying this market on a dip or buying the grain markets in general. That we don't know yet. The other factor is the weather. The weather forecast has changed, or basically the same as Friday, where we've seen a flattening out of this ridge. The eastern corn belt here now is expecting more moisture and less temperature increase. Most of the upper corn belt, midwestern corn belt, will be normal with slightly higher temperatures, but rain is expected. So that's the latest forecast, and with that kind of forecast, you're going to find some pressure in the market. The corn market down anywhere from 6 to 7 cents or overnight, was down over 10 at one time right on the opening last night. But that kind of attitude is going to dominate the grain markets, at least early today. And then we can see if there's any fund buying that comes in and supports this thing. Weather in other parts of the world also influencing us. China, Drew Lerner, our weather forecaster, says that China crop conditions are pretty normal. There's not a lot of stress in most of the area. They've had some rain and fairly normal. However, in Russia, he says that the weather is still in a drought condition, and the drought is expanding in those areas. They've had some rain in the western portions of the FSU and Europe, which will help those areas. But Russia in general is still very dry, and that affects the wheat market, and that's why we're seeing some positive prices here in the wheat overnight. We would expect that to continue here today. Some of the technical things that we're looking at here: the corn market went up, tested the 62% retracement in the Dees contract up at the 410 level last week. A setback now would not be out of the question, maybe down to that 385 area. So a range between 385 410 is where the major support and resistance lie here today. Over in the soybeans November contract, we've got 967 as support with 993 as resistance. In the wheat, and that's where the action is right now, we've got the September contract very near its November of last year's high at 610. We've got nearby support, however, or nearby resistance at around the $6 area in September, then at the 610 level, support at 578 3/4, and then down at the 566 level. We believe that you've got to have a bias here of a producer, look at these opportunities that have been given to us and take advantage and make some sales. From a speculator standpoint, we'd wait to buy, look to buy this thing on a correction down against those support areas and using proper risk management. In the livestock trade, cash cattle, of course, quiet here early this week. We've got Choice on Friday was down 35, Select down 41. We would expect that the futures would come under a little bit of pressure here this morning as the stock market was weak on Friday. We're seeing a little bit of strength there today, but would expect the cattle futures to open anywhere from 10 to 20 lower early in the session. In the hog market, that market closed strong on Friday. Again, we've been talking about it last week. The weather is truly having its impact on the growth of hogs. Heat does slow down the hog production and hog performance. We are hearing this morning that some producers are cutting back some of the hogs that they normally would be selling on a weekly basis just because they're not ready. The weight gain has not occurred because of this high temperature. So that's providing some support in the cash market. Could very well provide support in the futures. Technically, we closed strong. We've got resistance in the August hogs around 82.10, and then again at $83. Support down around 80.35, and then all the way down at the $79 area. So our bias still is trade the hogs from the long side, look for breaks to get long. And if you got any questions, don't hesitate to give us a call here at Allendale. We'd be happy to answer any questions you might have. Call us at 800-262-7538. We wish you a successful trading day, and we'll talk to you tomorrow morning.